take it forward. And the guest on our show today wears two hats. Of course, he heads one of the biggest and leading wealth management companies in India, which is also a listed company. So actually, he is the management of the listed wealth called Nuvama Wealth, but also represents a company which is engaged in market-related instruments and investing for HNI and retail. So Ashish Kehair is joining us now, who's the MD and CEO of Nuvama Wealth. Ashish, afternoon, good to see you. Thanks so much for joining us. So let's break down our chat between the two introduction which I made. First of all, as a head of Nuvama Wealth, how's business momentum? I mean, the SIP book is going through the roof, making fresh record highs every month. How's business momentum at your end as you see it on ground?
Firstly, thank you, Ajay. Good afternoon to your viewers, and thank you for having me here. Uh, as you rightly said, I think the business momentum, not only for us, for the entire market, is very good right now. The numbers or the corporate profitability has been strong in India, and even the FPI flows after a few months of seeing outflows have improved considerably. And the domestic money, I think the individual domestic money has held strong throughout over the last 2 years, and overall, that I think is having a really good impact on the business.
Ashish, I want to understand what's happening on ground with a little more granular manner, because you at Nuvama Wealth have got feet on ground and your eyes and ears are in the deeper parts of the country, not only the top 15, 20 larger cities, tier 2, tier 3, the affluent over there, and the rising affluence in smaller cities. How's their the mood among them, especially for financial assets?
I think post COVID, there has been a tectonic shift, Ajay, in the so-called tier two, tier three, tier four cities, because the digital India got everybody connected, and I think people had time on their hands during COVID, uh, and markets also rallied one way. Combination of these factors exposed them to financial assets. Earlier, their exposure largely used to be to bank deposits, maybe to small saving schemes, and to real estate and gold. But now I think the capital market assets are taking over, and very frankly, the activity which we are seeing in those cities on a relative basis is significantly higher than what we see in tier one, tier two. Although the volumes in tier one, tier two will always remain high because the bulk of the wealth is there, but you will not be surprised over the next 3 4 years the kind of rise which you will see in capital assets in tier 3 tier 4. We are seeing significant amount of demand, significant amount of acceptance from people towards capital market assets. And when I say capital markets, it's not only the traditional ones, which is mutual funds and insurance. People are opening up to bonds, people are opening up to REITs, InvITs, and so on.
So Ashish, at Nuvama, what's the strategic area of focus going forward directionally?
So directionally, overall, we've always maintained that wealth and asset management will drive our growth, because I think that is where we see the sectoral tailwinds of the industry as the Indian diaspora moves from developing to developed, maybe from a 3,000 per capita to a 10,000 per capita GDP. The disposable surplus available with people to invest and save increases disproportionately. And that essentially gets channelized both through wealth management into asset management. And I think that is the sectoral tailwind which all of us are going through, and we will bet on that.
Right. Let's shift focus and talk about markets then, Ashish. What are your thoughts after such a scorching rally? Is there juice left on the table? In other valuation metric looking slightly dizzying now, or you think that the corporate India earnings momentum will catch up fast and then markets may not appear very expensive?
See, Ajay, we've all been long in the markets. Markets do not give you time either ways to react. They are always, forward looking. They discount future earnings much faster than we can comprehend. Uh, I think the good thing which we are seeing now is that corporate earnings are keeping up pace. The challenge happens when the run up in the market is too fast and the corporate earnings slow down. We are not seeing that or witnessing that right now. So as long as that continues, this cat and mouse chase will continue. In a scenario like this, when Elections have been won in 3 out of 4. There is an expectation that at least next year rate cuts will start to happen. Oil prices have corrected. I think at a macro level, while there may be many negatives, which they are, globally, many of the countries are not in a good shape, but India is in a sweet spot right now. I think this combination continues. As long as corporate profitability keeps up the pace, I think markets will be fine.
Right. How are flows in your schemes right now? The flows to the industry look very good right now. Are you also witnessing more flows towards mid cap, small caps, or you are managing it and you are actually, directing it accordingly?
So we've been vocal now for the last 3 4 months, telling clients to shift focus to large and maybe flexi cap, because mid and small cap has seen a significant amount of run up. I think the corporate profitability of mid and small cap has been strong. The issue always is the liquidity and the depth in the stocks. If ever there is a selling that comes, I think it's very difficult to absorb the supply without going through major price correction. So people should slowly shift their allocation. It should not be shifted overnight, and maintain asset allocation between large, mid, and small in the right proportion. I think the juice of mid and small, which had to be enjoyed, has been enjoyed over the last 1.5 2 years. Over allocation into that, continued over allocation into that, could result in portfolio level shocks, which may be difficult for people to absorb.
Ashish, let's the one part of your business which may be keeping you and your team very busy lately, the investment banking side, the institutional equity side, big blocks are happening there. We are seeing, be it from investor side or even promoter side. At the same time, IPO pipeline has been pretty hot as well. How's that end of your business, and what's the outlook there? You think is it a sign that the informed guys are selling? So it's a sign of top.
See, one nobody has been able to ever call out a top, Ajay. It's also a reflection of, yes, promoters may be finding the valuations attractive to raise some equity, which always helps if they want to get into capex cycles and expand their businesses. These are the right times to raise money. It's not. It's actually a very very tricky place to be, because typically companies prepare for IPOs and then markets are not good, and then your cards expire and then you have to refile. So whenever you get such times, I think it's good for corporates to raise some amount of equity, provided they have expansion plans and good use of that. And we are actually seeing that in the market. Tops and bottoms of the market, very difficult to call out. Yes, we are seeing informed selling happening right now, but I don't think that should be a top of the market.
What are your thoughts on the rate trajectory? The recent commentary from RBI seemed to suggesting that we are heading for very strong growth, and inflation may actually start tapering by Q3 of next year to closer to 4%, 4.2 actually. Plus talks of rate cuts in US also started. Can we expect one in our own economy by mid of next year? Would that be the right thing?
I think that is perhaps the right assessment right now, looking at the factors which are at hand, and also looking at the recessionary situation, at least in the US and certain other parts of the world. Even China is talking about fiscal and monetary stimulus. If that starts to happen sooner, the pass through will happen in India also. And that, I think, is a very, very reasonable assessment at this point in time.
All right, Ashish, we'll let you go on that one. Thanks so much for joining us today for the
Thank you.
discussion on
Thank
the
you,
show.
Ajay. Thank you once again.
That was Ashish Kehair of Nuvama Wealth. Look at this last 6 months, last few months, ever since that particular stock got listed, there has been a tearing rally. I'll pull up the stock price. It got demerged from Edelweiss and is gaining 1%, 3,200. But in the last few months, almost 25% kind of gain coming in Nuvama Wealth.